Welcome back to the channel, everyone. If you've been watching the screens over the last 24 hours, you know exactly how wild things have gotten. We are looking at massive geopolitical standoffs, crude oil spiking past the $100 mark, a record low Indian Rupee, and Bitcoin doing things nobody expected during a macro crisis. Today is Wednesday, March 18th, 2026, and in this video, we are breaking down the absolute most critical macro events and stock market moves from the last 24 hours. We've got this broken down into three parts: the US market, the Indian market, and the global and crypto markets. Hit that like button, and let's dive right into the numbers. Let's start with the US. Despite a looming Federal Reserve interest rate decision and terrifying headlines out of the Middle East, Wall Street actually managed to brush off the fear and close in the green. Here is where the major indices settled at the bell. S&P 500 closed up 0.25% at 6,716.09. Dow Jones Industrial Average edged up 0.10% to 46,993.26. Nasdaq Composite led the pack, up 0.47% to close at 22,479.52. The elephant in the room is energy. The ongoing US-Iran conflict has completely disrupted shipping traffic through the Strait of Hormuz. We are seeing a historic supply shock to energy flows. Brent crude futures firmly held above the psychological $100 support level, settling at $103.42 per barrel, while WTI crude closed around $96 per barrel. You would think this would crush the markets, but traders are currently adopting a sell first, consider fundamentals later approach. We saw a massive short covering rally. Airline stocks actually surged, with Delta up over 6% on expectations of a rush to book flights before fuel costs are passed on to consumers. Meanwhile, the Magnificent Seven tech stocks had a mixed day, with Google and Amazon up over 1.5%, while Nvidia and Meta saw slight pullbacks. Hanging over all of this is the Federal Reserve. Markets are nervously awaiting the Fed's next move. Traders are no longer fully pricing in the interest rate cuts they expected earlier in 2026, and the US 10-year Treasury yield is hovering around 4.20%. Moving over to India, where the markets are showing incredible resilience despite some very nasty macro headwinds. For the second consecutive session, Dalal Street saw heavy buying. Sensex jumped 568 points to 76,070.84. and Nifty 50 rose 172 points to 23,581.15. Over just 2 sessions, the Sensex has recovered more than 1,500 points, adding over 3 lakh crore rupees in wealth to investors' portfolios. India imports the vast majority of its crude oil. With Brent breaking $100, this is a massive red flag for India's trade deficit and inflation. In fact, the macro pressure pushed the Indian Rupee to a record low of 92.38 against the US dollar. So, why did the market rally? Short covering and bargain hunting. Domestic investors stepped in to buy the dip after the recent market drubbing. Sector rotation. We saw aggressive buying in cyclical sectors that were previously beaten down. Nifty Metal surged 2.82%, auto was up 2.11%, and banking indices rose nearly 1%. Economic optimism. Investors are looking past the short-term crude oil shock, betting that domestic growth will outweigh imported inflation. However, technical analysts note that the Nifty 50 has a crucial support zone at 23,300. If geopolitical tensions crack that floor, we could see a rapid shift in sentiment. Finally, let's zoom out to the global stage and the crypto space, because politics and digital assets are colliding in a big way right now. The global equity markets, particularly in Europe and Asia, are faring much worse than the US, because Europe and North Asia rely heavily on energy imports from the Gulf. The ongoing closure of the Strait of Hormuz is acting as a massive tax on these economies. Donald Trump took to social media declaring that preventing Iran from acquiring nuclear weapons is far more important than oil prices. This signaled that the US is willing to tolerate energy inflation for strategic goals. In response, Iran's new supreme leader, Mojtaba Khamenei, issued a strong statement confirming they will not abandon revenge and insisted the Strait of Hormuz will remain closed, injecting even more uncertainty into global supply chains. Now let's talk about crypto, because the digital asset space is completely ignoring the traditional risk-off playbook. Bitcoin is hovering right around $74,000, while Ethereum is trading up around $2,314, climbing over 10%. XRP also saw a massive 10% spike, crossing $1.58. Normally, when war breaks out, risk assets dump, but right now, Bitcoin is showing serious safe haven characteristics, actually outperforming traditional gold, which has slipped recently. Investors are treating BTC as a hedge against fiat currency uncertainty. That being said, Citi did just lower its 12-month price targets for Bitcoin and Ethereum, citing slower than expected legislative progress in the US. But with consistent ETF inflows acting as a price floor, the bulls are still very much in control. That is your global macro and stock market wrap-up for the last 24 hours. The situation in the Middle East and the Fed's upcoming moves are the ultimate wildcards right now. Protect your capital, watch those support levels, and stay tuned to the channel. If you found this breakdown helpful, please hit the like button, subscribe, and let me know in the comments. Do you think Bitcoin is the new digital gold in times of war? I'll see you in the next one.